Nice to have you with us. Joining me in the show this time around is Glenn Silverman, who is the Chief Investment Officer at Investment Solutions. And joining us in our Cape Town office is the Old Mutual's John Duncan. He's the Head of Sustainability Research and Engagements. We're talking about responsible investing. Let's just establish where the two people fit in here. Glenn, let's start with you. What are you, as a Chief Investment Officer, what is your role in this?
So Investment Solutions is South Africa's largest multi-manager. It means that we don't go and buy any underlying securities. We would pick asset managers, Investec, Old Mutual, where John works, etc., package them into portfolios, and our clients would invest into those. So we may be one step removed from the direct trading of underlying securities.
So you would say to people like John, this is the sort of fund we want to put together. Go run, find them, come back to us, and we will package that up and then sell it on.
That's exactly right.
Exactly. I'm not bad, eh? for somebody who knows nothing about this. John, your particular role in this, I take it you are the go-to person when it comes to responsible investing. Give us a bit more detail on that, what it is about.
Sure. My particular role here at Amixa is to work across our various boutiques to really help our analysts and portfolio managers to understand some of the longer-term environmental, social and governance risks, and to bring to them data research and new thinking about investment processes that they can implement in their day-to-day work.
Okay, this thing called social responsible investing. Let's get some definitions going here. What is it? What does it mean?
So I think definitions are always complex and difficult, and they change through time. It used to be SRI, the social thing. Now people talk RI. John used the term ESG, the environmental, social and governance aspects. So definitions can actually be very complex, but I think it is about taking a longer term view, not the next quarter's results, whatever, but something on a more sustainable type of basis. And it is something that brings those three subcomponents into focus. The environment, quite complicated, society, quite complex, and obviously the governance aspects, actually probably the easiest of the three.
John, are people starting to become more aware of where their money is being banked and what the implications are of investing in certain stocks, shares, bonds, all the rest of it?
Look, if I could, I wouldn't mind going back just one step to the definition side. I think Glenn's right. Definitions are complex, and it's important that we get clear in terms of what we're talking about here. Responsible investing itself is really just a set of professional commitments by either an asset owner or an asset manager to take a longer-term view, to try and understand the long-term environmental, social and governance risks, and to look at systematic ways of building that into their portfolios. This is slightly distinct and separate from, say, ethical investing, where an asset owner or an investor may come with a certain set of ethical criteria which says, please exclude companies that manufacture armaments or alcohol, tobacco from my portfolio, and once you have created that universe, go ahead and invest. That kind of ethical negative screening is slightly different and separate from, say, socially responsible investing, which again I'll try and define as something distinct and separate to just pure responsible investing. The social responsible investing space, typically what you see is investors who have a certain set of social outcomes that they're looking to achieve, while at the same time looking to get an appropriately risk-adjusted return. And that is slightly different from, say, pure responsible investing, which really challenges investors and asset owners to pick up the sustainability lens, look at the long-term risks and or opportunity, price them, and then show up as a responsible steward and or custodian of the asset. And in the world of responsible investing, as is envisaged by the UNPRI and CRISA, and to some extent Regulation 28 to the Pension Fund Act, This process is not so much about constraining the investment universe, but rather looking at mechanisms to price long-term risk and opportunity.
Okay, now you're going to have to be a bit more down to earth with me, John, because I'm just a normal moron on this particular one. Let's just go back a little bit there. So, am I getting it right if I say to you that this is not the? I'm trying to look for an example. This is not a fund like a Sharia-based fund, which would exclude things like alcohol and that sort of investment. Where do you say social responsible investment? What is your outcome? What outcome are you looking for as a fund manager in this particular basket of goods that you're putting together?
So, I mean, let's quickly talk about socially responsible investing. In this world, an investor may say, listen, I'm interested in fixed income products, but I'm also interested in fixed income products that are going to be used to generate a set of positive social outcomes, be those affordable houses, schools, infrastructure that's going to be put in place in impoverished areas. So in this context, the investor is not saying, listen, just go and get me any fixed income product. What the investor is saying is, go and find me a fixed income product that's also going to deliver a certain set of social outcomes. But I think it's also helpful to look at where the world of responsible investing comes from. And I think this might sort of help viewers understand, what we talk about, what we mean in terms of responsible investing. And it's really got to do with a broader set of social and environmental sort of movements that have been happening across the globe for the last 20 to 30 years. This is a conversation that emanates out of the world of sustainability. And slowly but surely that spotlight has swung across to the allocators of capital, big, large pension funds who are naturally aligned with what the future looks like. And in about 2005, Kofi Annan challenged some 40 of the world's biggest pension funds and said, look, you guys are naturally interested in what the world's going to look like 10, 20, 30 years from now. So does it not make sense for you as long-term investors to start systematically considering these long-term environmental, social outcomes of the investments? And the world of responsible investing was really kind of birthed out of that initial dialogue in 2005. And a set of voluntary principles was put together that largely targeted these long-term investors to say, how you invest today determines the quality of the future we all get. So as pension funds or as funds with a long-term interest, it makes sense for you to seek ways to systematically start pricing and looking at environmental, social, and governance type risks through the investment life cycle.
Okay,
does that help at all?
Yeah, it makes absolute sense to me. But what is the uptake here, Glenn? In South Africa in particular?
I'll take this maybe a little bit further as well. Our mission statement as a company is to try and get above average returns below average risk. And this particular space, I think, fits that perfectly, because things that are unsustainable tend to lose you money over time. We look at NASDAQ bubbles, housing bubbles in the US. You have a nice run for a period of time and then you lose 50, 70, 80% of capital, never to be made back again. Not a great idea. So understanding the risk and environment we think is really, really important for asset managers, for mobilizers of capital, etc. And in this space, a lot of studies that show you can also enhance return. If you pick companies that have a more sustainable business model, for example, you can get higher returns as well. So we just think it's a really important space which we've kind of aligned all our portfolios to. We meet with asset managers and we score them on the basis of, are they thinking about these things? Are they taking it into account in their modeling of companies, in the risks, in the sizing of their positions, etc.? So it has direct impact on what we do. Your question was maybe a more global one as well. We find my experience has been speaking to our US-based asset managers is they're not really aligned with this. It's, we want quarterly performance, show us the back, that's all that really counts, etc. Europe, very strongly aligned. And I think South Africans are making great progress. When we speak to asset managers, we do a survey once a year. We've just sent one out now. It's The second survey we've done and do it about mid-year to 56 managers, the majority in South Africa, but about 20 global managers, and we're waiting for their responses to come back. Last year's survey showed a very, very high interest, passion, and at least expressed interest in this space.
Why do you think it is that South Africans are wanting to get involved in this? Is it because we're sitting in a situation where, for example, we're seeing rhinos being poached, we're seeing water resources being trashed with human waste and all the rest of it?
I think there are a few components. The first one is something that John alluded to, is our regulatory environment that governs pension funds now insists that you have to take these into account. There's actually no longer discretionary.
Okay.
So one has to, as part of our conduct in terms of meeting Regulation 28, which is what it's called, we have to take these into account. Secondly, I think South Africa is very used to the fact that, for example, at societal level, has enormous impact on investments. If you have a Americana event, it has a direct implication on the platinum industry, on Lonmin, etc. And, you know, shares react, as an example, kind of very strongly to those. So I think there is a very strong sensitivity within a place like South Africa to all these aspects. I think we're a more sensitive and a very open economy. We're always impacted by what happens more globally. I think America sometimes, you know, sits in its own splendid isolation and almost can afford to, and therefore maybe less open to some of these issues.
John, your take on this? Where does it come from? Before we go to a commercial break in a minute and a bit.
Look, you know, my own, and I'm speaking from my own personal experience here. I get a sense that South Africans have traditionally had to look long and hard at social issues in this country. At the same time, as a country, we've also experienced you know, divestment programs from this country as a result of social issues. Additionally, we have an economy that is largely resource driven. So we see the impacts of large scale, you know, resource programs on the environment, on society. So, you know, I'm not going to say that South Africans are better than anyone else, but there is something about you know, our cultural history and our makeup of our economy that has forced us to think about these issues. Additionally, we've also traditionally in the listed space led quite strongly on governance, and I think the King Code has created quite a lot of important momentum around, you know, how we carry ourselves